Welcome, financial explorers, to Investing Lighthouse, where we navigate the thrilling currents of finance. We're thrilled to have you aboard, regardless of when you join us on this ongoing voyage. Today, we're about to embark on an exciting adventure through the labyrinth of the US national debt and the much-debated debt ceiling. Even though we're focusing on a specific moment with the deadline of June 2023, this captivating subject has a timeless relevance that perpetually re-emerges on the national and global stage. So, please sit back and fasten your seatbelts as we unravel this intricate financial mystery. Picture this. You've got a credit card with a spending limit, and you keep hitting it every month. So, what do? You reach out to the bank and request them to raise your limit, right? In a nutshell, the US government does that with its debt ceiling, the legal limit on how much it can borrow. But unlike our everyday credit card dilemmas, the scale and implications of the US national debt are astronomical. From a mere $290 billion in the 1960s, the national debt has skyrocketed to a staggering $30 trillion by the end of 2022. That's like stacking a $1 bill 2 million miles high, nearly enough to reach the moon and back 4 times. Now, in the grand theater of the world's economy, the bond market plays a starring role. When the US government needs to borrow money, it issues treasury bonds, essentially IOUs, promising to repay the borrowed amount with interest. These bonds are popular among investors because they're considered safe. After all, they enjoy the backing and guarantee of the US government's full faith and credit. Now, you might wonder, how can the government just decide to borrow more? Well, here's where the drama unfolds. The debt ceiling is not automatically adjusted for inflation or spending increases. Raising the debt ceiling necessitates the US Congress to pass a bill and the president to sign it. And with the partisan divide in Congress, this is where things can get sticky. Imagine a tug of war, with both sides pulling at the rope, each for their reasons. One side insists that we must control our spending, while the other argues that the growing economy and critical programs justify the need for more debt. As we approach June 2023, this political tug-of-war is in full swing, with no resolution yet in sight. So, what occurs if the debt ceiling is not raised? Imagine a giant financial domino effect. If the US hits the debt ceiling and defaults on its obligations, it could cause a seismic shift in the bond market. It would shake the faith of investors and nations who view US Treasury bonds as the ultimate safe investment. It's like watching Superman falter. It would send shockwaves throughout the world. A US default could shake the very foundations of the global financial system. The US Treasury bonds, often dubbed as risk-free assets, would be seen with skeptical eyes. And yes, there's a significant risk that the country's credit rating would be downgraded. Interest rates on US bonds would spike as investors insist on higher returns to offset the increased risk, leading to higher borrowing costs for not only the US government, but also corporations and American consumers. As this increase in interest rates ripples across the economy, affecting everything from mortgage rates to corporate borrowing costs, it would dampen economic activity and trigger a recession or, even worse, a financial crisis. But what about the stock market, you might wonder? Well, think of the stock market as a barometer of investor sentiment. When investors get nervous about the debt ceiling, it can trigger a sell-off in the stock market. If the US defaults, the stock market could plunge as investors flee to safer assets. This could wipe out trillions of dollars in wealth and severely blow consumer confidence and spending, deepening the economic downturn. Now let's connect the dots and discuss an often overlooked player in this saga: the Federal Reserve, or the Fed. The Fed's job is to manage inflation and unemployment, and it uses interest rates as its primary tool. But in a situation where the US defaults, the Fed might be caught in a tough spot. With increased inflationary pressures from a falling dollar and skyrocketing bond yields, the Fed might be compelled to raise interest rates, which could exacerbate an already fragile situation. As we dive deeper into the intricate relationship between the US debt ceiling and the global economy, it's clear that every decision, every move, and every delay ripples through the economic fabric, and that's the heart of the issue. The debt ceiling isn't just about numbers and budgets. It's about people's lives, their savings, their dreams. But would policymakers get to the point of permitting the US government to stumble into a default? History tells us probably not. In the past, political brinkmanship has often taken the US close to the edge. But a last-minute deal on the debt ceiling has always averted disaster. But this high-stakes game of political chicken is no laughing matter. The stakes are significant and the risks are real. Let's now talk about that $1 trillion coin. It resembles a plotline straight out of a comic book, right? But it's an actual proposal. Here's the gist. By exploiting a legal loophole, the US Treasury, with the approval of the president, could mint a $1 trillion platinum coin, deposit it into its account at the Federal Reserve, and voila! Create $1 trillion in new cash to sidestep the debt ceiling and continue funding the government. This concept, first proposed during the 2011 debt ceiling crisis, offers a potential yet polarizing solution. However, it's a controversial idea that's not without its critics. Some argue it could spur hyperinflation or undermine confidence in the US dollar, while others say it's merely a temporary fix to a long-term problem. To wrap up, the journey into the US debt ceiling world is a wild ride. It's a complex saga that intertwines politics, economics, and even a bit of drama. But as the clock ticks towards the June 2023 deadline, one thing is clear: the world is watching. Now over to you, dear viewers. How do you see this playing out? Will a last-minute deal save the day? Or will we see a $1 trillion coin make its debut? We'd love to hear your thoughts. Until our next rendezvous, this is your guide on the fascinating trail of finance. Signing off. Stay curious, keep learning, and let's navigate the unpredictable world of finance together. As always, remember to share and like this video. And subscribe to our channel as we continue our exciting financial journeys.